Welcome back to A Bite from the Money Sandwich, where we provide practical and easy to understand tips and ideas on how to manage your money better, so as to let you retire with comfort and on your own terms. You don't know what you don't know, and this is definitely applicable when it comes to your taxes. Today I speak to Danny Mazevski, founder of AMCO Chartered Tax and Financial Advisors. He's a chartered tax advisor as well as my own tax advisor. Danny explains why speaking to an accountant or tax advisor is something we should all do. Similar to going to a doctor for a checkup to make sure you haven't missed anything. A tax advisor or accountant will see if you've missed anything when it comes to your own expenses and taxes, as well as to ensure you have the right strategy in place. Plus hear Danny's top tips for tax time, especially if you work from home. Well, welcome Danny to the show.
It's my pleasure.
Okay, so you're an accountant. You've been doing this a long time. You're our accountant, and you are one of the better accountants that I know that are out there. But is this something you were good at maths at school? Where did you actually end up in the accounting field?
I think that's a bit of controversy. Most people think accountants have to be good at numbers. That's true. You have to have some sort of, where would you put it? You've got to have some respect for numbers and discipline and everything else that goes with it. But when you're getting into accounting and tax, it's more of I call ability to absorb a lot of things and then come up with what I call things that are a little bit more innovative, or I think there's an old saying that says creativity, but creativity, they reckon it's intelligence having fun. So you need to have the knowledge, the experience, and then you get to the point where you're having creative process, the wisdom and everything else. And tax is a bit like that. It is not hard and fast, science. So yeah, there's a degree of closeness to numbers, but I think more to the point, having that ability to wrap your mind around complicated things, get to the core issue, and then come up with something that is what I call novel or creative, that is sort of different, that is not available out there. So hope that answers the question. I was okay in maths. I wasn't the top of the class, but then over time you come to realize that is your calling, and you end up gravitating and getting to the groove, so to speak.
Yeah, I've never really heard of accounting as creative and fun, but I do feel you are a bit different to the average accountant out there. But one of the things I really appreciated and just enjoyed knowing you for so many years is that I do think that people's view of accountants are very stodgy, if that's still a word, sit behind a desk, do the numbers and that, but you actually are very serious about building relationships, and you've got a lot of long-term clients.
Yeah, and I suppose the thing that comes across is the having been exposed in commerce for a lot of years. So I've spent a good part of my career in a publicly listed company, so you get an exposure to commerce. Did a bit of a stint with Deloitte for about 3.5 years there in consulting with them as well. And when you get that broad exposure between commerce, public practice at the big end of town, and now we're in the small end of the town, you get a really good feel of what I suppose the client needs, what sort of commercial aspect to the business you need. And then I call it, you get a bit of a personality. You sort of step out of that mold where you sort of absorb everything, but then you're there to actually take the client with you through the journey. I sort of, sadly, I think a lot of clients aren't advised well enough or don't understand the tax well enough. So quite often when you ask them their issues with tax, they pay too much up, but they don't know what causes it, And I think it's important to always get to the core issue and say, what's causing the unpleasantness in tax? How can you do things differently next year? They're the missing bits. So I believe a good tax agent and accountant knows it well enough, but they can articulate it well enough to the client and actually suggest some things to improve for the following year. So you don't repeat what you've just done 12 months ago, if that makes sense.
Yeah, it does. And you are trying to understand their whole business or their reason for being, not just the tax part.
No. Yeah. No, that's quite right. And it's interesting. I'm going to digress a little bit now. A nice little article in the, I think it was in the Financial Standard the other day. It said why clients fired their advisors. Great little article.
Yeah.
And Morningstar did the research. And interestingly, it wasn't the price. They said it was only a small portion. The biggest issue is advisors not understanding the clients well enough and being able to stay close enough to their needs. And the client felt that the advisor was disengaged, almost sort of running on a different level, and hence why they moved on. Very relevant, I think, for tax agents as well. And this is something that we've looked at in our practice. It's not always the dollars; it's more to do with the value diminishing over time, and then hence the price becomes an issue. So it's a good point. It's a good research. It confirms again that price is not sort of the main thing. It's really the value, and when there's absence of value, then price becomes a problem.
Yeah, totally agree. And, I've been mentored a lot of advisors over the years, and that's one of the, number one points, that they think it's price, it's value. You're absolutely correct. And, there was a lovely old saying, clients don't care what you know until they know that you care. And it just, it was right 100 years ago, and it's still right today. So no, it's financial advisors, or now money coach, but also accountants. It's exactly the same. Okay, but it must also be strange, because you said you did work at the big end of town, and I've had experiences with that through my own businesses, and I've always found, smaller suburban accountants you can build that relationship with, as I've done with yourself. But you must be looking at the things that are happening with things like PwC and some of the big end of town, and just looking and saying, gee, you're looking at care, or the care factor, or good governance, and there's just I struggle reading some of these stories, people who should know better.
Well, what was interesting about a couple of weeks ago, irrelevant who the second tier chartered accounting firm is, but let's just say a second tier chartered accounting practice in our country.
Yes.
A client that came in, we gave him some tax advice consulting. They're a client of the other practice. Interesting, they wanted to get a self-managed fund set up, and now the question comes up of a strategy that you need to put together in order to make the whole thing run. And the second tier chartered accounting firm basically said, you need to go and get an advisor, and then we'll do the rest of the other stuff for you. Now, interesting enough, he actually flicked the whole email with all the intellectual property from this second tier firm to us and said, guys, you reckon you can help me with this? And of course we can help, because we've got an integrated practice. But it made me think, I thought, that's interesting. A second tier chartered accounting firm, back to your question, quite a large part of town, has not embraced the idea that a client does grow into various stages. Their business grows, their financial planning needs grow, and eventually they will be lost. They will move across because they've outgrown their particular business model. So we're hoping, I guess, with our integrated model, that no client can outgrow us, in the sense that when we take that journey, we basically have all the capacity here between tax and advice to continue that journey and put their mind at ease that, hey, they found a home now, they don't need to look for another home. So that's something that I found very, very, very interesting. I thought, wow, could there be a future for these integrated practices, in years to come, because consumers are needing that support, and they'll walk.
Absolutely. I think it's a lot. I agree definitely with it. One of the things that clients, compared to 20th century to 21st century, I often asked to talk about the 21st century, people are just busier. Life just gets busier, and they don't have time to go find, an accountant, an advisor, insurance broker, a property advocate, or a mortgage broker, or whatever it is. They're nearly wanting a one-stop shop. And you don't actually have to employ all these, but you need to have a network that you can help these, because you're making your clients' lives simpler. And that's there again, as you said, when you provide value. That's exactly you've built up relationships with other specialists, and it saves them having to go and try and find it. It's the old, if you want to build a pool in your backyard, rather than do it, you always ask your friends, who did you have a good experience with? And it's exactly the same point. People, want to see value from their provider, and you're doing that with providing this nearly one-stop shop.
Yeah, so that I found very, very interesting in the future. So the idea, as you rightly said, you either have the discipline in-house, or you partner with others that are. And the difficulty we've had over the years blending the financial planning and tax was that just difficult at times to find people that had the same mindset, that they're set up for the long term. You get a lot of changes. I mean, you'll be well aware in the banks, people just basically used to move, and you've got different people handling the file. Now that's frustrating for clients, and no disrespect, again, a lot of small practices, they fold, they change hands, clients get moved around. All of that to me just makes it a little bit hard. So those two areas we handle, and then we also get into the small business, as you said, space. So we basically have the tax, accounting, small business, and then you add the financial planning. But other things like mortgages, legal, you basically work with some really good operators, with like-minded people and proper businesses that we work with.
And it probably leads into probably my next question, because a lot of people, of course, if you own a small business, you shouldn't even try and do that. And we will talk a bit about that later, because a lot of small businesses do struggle. But people who are just on salary, whether in management or an executive or just anyone, mum and dads on salaries, really should, for me, build a relationship with an accountant. Not just there's a lot of lower cost ways you can get your tax returns done, but you just explained there's some of the value about some of the other services you can provide. But in your view, why would someone who's on a salary build a relationship with an accountant?
Yeah, look, probably the best way of looking at that is to recognise that the income tax, the legislation is complicated. The courts make it even more complicated because they have cases that come before the court. So there's various precedents set. Now, all of that, the average person, no disrespect, can't possibly get to. Tax is not logical. A lot of people sort of say 1 and 1 is 2, and quite often, in many parts of the law, you could find, you go, mate, if I work that and that, it should be that. And the ATO says, no, it's not, because of case law, that and that. So forget about that. This is the way it goes. Now, that to me, to any professional, is a challenge, because you're looking for logic, and sometimes there is no logic. You just need to know how the courts have ruled, and you go by the rulings. So that's one issue. The other one is obviously mistakes are made. People basically try to do it themselves, and they could make mistakes. You don't know what you don't know. That's the old saying. You think you've got it right, but you're probably miles out because you missed things in the tax. But the interesting one I'm going to share with you that resonates with me was a few weeks ago. We had a client in here, quite a very high level executive, and he has referred another guy many years ago. He's a chartered accountant. And it's interesting, the last conversation I had with this executive, he said, can I take a few minutes to give you a bit of feedback, Dan? And I said, go ahead, mate. And he says, well, XYZ that I referred, he's a chartered guy, you know that, right? And I said, well, yeah, I gathered that. I mean, we've done his tax. He said, I actually asked him, I said, mate, you're a chartered accountant. Why the hell would you go to someone like Danny to do your tax? He goes, surely you could do this stuff yourself.
Yeah.
And the comment, interesting, back to him was, he said, I probably could, he said, but I don't trust myself. Apparently that was the feedback. I could probably do a great job, but I don't trust myself, and I trust Danny more than I trust myself. So it was an interesting observation. So whether he messes up his tax, or whether he's got lack of knowledge or whatever, but he's a chartered accountant. So that was quite an interesting story that came out of left field. And I thought, here's a classic case where someone is a chartered accountant and basically still comes in and sort of says, mate, I'd like you to do it, and give me sort of further advice. My thing is, until you actually get it done once, a bit like a health check, it's a bit like not having ever gone to the doctor and assuming everything is correct. I encourage everyone to have one appointment with a good advisor, tax advisor, and say, just to gauge to see if there is anything missing. Because a good tax agent or an advisor, I think, will be worth multiples of whatever the fee is, multiples of it, not simply the fee that they charge. That's a good one. A bad one, you probably don't want to sort of visit. So you got to do your due diligence, find a good person, and just do that one check to sort of, the old thing, and I'm sure you agree, assumption is a dangerous word. You can't just assume that it's correct. Test it once, grab an advisor, and say, for the sake of spending that, do the health check once in your life.
Yeah, no, that's a good point. And I also think, people will always Yeah, yes, it's like anything. You should always get 3 quotes or go see 3 people you'll want to see, one you feel most comfortable with, but you always get recommendations from friends and peers and all that. And because there'll always be someone that they've had a good experience with, and that's a really good starting point. You've explained that quite well. I also think that when you were saying about the chartered accountant. It is true that we had an investment fund manager as a client, and he could absolutely do his investments far better than we, but he just didn't he had his own little specialty, and he was concentrating that, and he worked long hours, and he just said, I'll just never get around to it. I'm always at my work. I'm never looking at my own stuff. At least if you're doing it, I know it's getting done. And so that's definitely a part of, the service you can provide. So that's probably a really good explanation about why someone in salary. A stat I read a long time ago, and I still think it's applicable, that probably 90% of small businesses fail within the first 12 months because they may have a great idea, they may, and even they may grow too big but they just don't even know the basics about running a business. And I've even helped some family members where they were actually in the job for 10 years. So they said, I know this job inside out. Now I've been given the opportunity to do it myself in my own business. It's just different, isn't it? It's just really different when it's your own business, it's your own money on the line and all that. It's just different. It'd be great to sort of get your views on if you're going to start out, especially if you're starting out in a new business, and a lot of people have side hustles on the side there. What are some of the things you look out for or how you advise people?
Business is a big word. When someone comes in and says, look, I'm going into business, our first question is to say, look, are we going in business to truly build up a business with goodwill, or are we just buying a job? Because there is a big difference in it, right? And a lot of clients, when they go in business, they haven't really thought about it. All they're thinking about is the freedom. I'm going to be away from the boss. I can call my shots and I'm going to make millions, But the reality is, if you break it up, you say, look, it can only be one or two things. It can either be a truly business setting where you're building up goodwill over many years, or it is self-employment where you basically can't scale this business. It becomes you and you're just generating income. You're de facto employee set up under the banner of a business, right? And sadly, quite often, clients don't know which part that sits. And when you cut through the numbers, sometimes what seems to be a business in the mind of the client, it's not scalable, it's not worth it. They're best to just slip back and just be paid a normal wage, pay super, pay all the and just be much better off. Quite often they would compromise themselves. They don't pay themselves enough, they don't put super away, they don't provide for things, and they fall behind on obligations. And unfortunately, the client that they bill is the one that sort of sometimes gets the advantage of that, because they don't have to pay all the on costs and everything else. And this person supposedly is running a business, but they're not. They've just bought themselves sub-employment. It's not even proper employment. So that's probably the very, very, very big item that we get out of the way first, just to make sure that we've got that set up. And then the next one, which, is basically putting a proper legal structure, the same dollars generated under different legal structures can have profound effect in terms of their protecting the assets for the client, in terms of tax comes into play, in terms of exit point. I mean, if it is a true business and you're building goodwill, at some point in time you want to be selling that business and you want to exit at the right money. You need to have it properly set up and with the end in mind, rather than ticking it off and hoping that one day magically something will happen. So there's all those things that go outside the normal tax arena. I mean, tax is compliance and planning, but the actual structure and the longevity and capitalizing on that, business venture that a person starts, I think it's important. So we do spend a lot of time in that added value space, only to help the client actually maximize the gem of an idea that they come up with. Yeah.
Yeah. And well, just actually on a quick one then, because people I know often came to me and asked, well, I'm going to set up my own small business. And then I would say, go get a good tax account, go see Danny. But even just understanding, should I be incorporated or should I be a sole trader? Could you just give a quick summary of what those two are?
Yeah. I mean, look, from a cost perspective, not incorporating tends to have the advantage because you're not incurring those establishment fees with ASIC and all the other compliance every year, which is financial statements. So from a cost perspective, a lot less costly to be a sole trader. But it becomes what I call a very crude way of running a business, and perhaps even dangerous one to run a business. A lot of clients or business owners aren't aware that they carry full responsibility for anything that might happen in the business, whether it be the ATO putting pressure on them, whether it be a supplier putting pressure or anything. It all flows back to their private assets. The corporate area does give you protection, but it also gives you an ability to say, well, I'm being paid a fair wage. The leftover money now, I could leave it in there and pay the corporate tax. Just simply 25% to me sounds a lot better than generally 35, 38, 40%. So straight off the bat, you can then start thinking about how you break up the pie, so to speak. I have a simple thing that says if you're playing with it for a few months or 6 months, it's a bit like dating someone. Sole trader probably will get you because the risk is not great. But once you've been dating for a year, 2 years, you really got to make commitment now. You cannot possibly continue sort of say, well, I'll run with sole trader. It's time to get married now, and you should know that it is working or not working. And the classic one I always use is go around and have a look at successful businesses and count how many are sole traders still.
Yeah, okay. Now that makes sense. And so as a corporate just means you're a company and you're a PTY limited company.
Yeah.
How much of it, and I come back to this, I remember, I think it was one of the big banks had a deal that would always, if you were a doctor, they would basically provide you all the leasing as soon as you become there. And I remember someone, he said, well, I've got this, I'm going to lease all this equipment, and it was like $1 million worth of equipment and all this. And I'm going to get all this great furniture for the front office and all this. And I said, okay, so what's the leasing cost on all that? And he said, well, no, Westpac's giving it, or whatever the bank was, giving it to me. And I said, yeah, but if it's say like 30,000, 40, 50,000 a year in leasing costs, how many patients do you actually have to see every month to cover that cost? And they just don't think that. They don't even just do the numbers. They just say, Westpac are willing to give me this money to get all this lovely medical equipment or benches or whatever they needed in this equipment. That must be a big part of what you do, just to say you need to hit the reality button.
And what happens is, only as recent as yesterday, quite a fascinating incident with one of our clients. He rang through, and one of the senior accountants manages his portfolio, doing very well, transport, and wants to buy a ute, right? Fairly standard transaction. And I only caught up the wind of it because the gentleman here, the tax guy, that gave him all the tax advice, so technically perfect, no issue. And I just looked at the number, a ute, $250,000 ute.
Really?
Right? So now this is where, the holistic or integrated practice kicks in, and I go, wow, 250, what the hell is this thing? Is a gold-plated tray at the back or something, So I just shot him an email. I said, just checking to make sure your cash flow and everything else, you're in the right space for having looking at this potential purchase. I said, it's quite, and he rang me immediately. He said, well, what do you think? I said, well, I'm just looking at it in a very, very, very basic light as a tax agent and an advisor. Do we really need $250,000 ute for your transport XYZ business? He said, but it's a limited edition thing from the States. And it's one off. And I said, but you're still driving it to work, for Christ's sake. So this is a ute, right? Yeah. And got to where we finished the conversation. He said, look, can I get your receptionist to book an appointment with my wife and I to come in and have a chat with you? But these are the things, and you can, reading between the lines, you see, no disrespect to mortgage guys, his loan was being refinanced. And the typical thing is, well, you can borrow more, so why don't you go and buy something of your wishes, throw a ute in there, you can claim it on the tax. And his repeated thing was, but I can claim it on tax, I can do this right off. I said, look, just put that aside for me.
Yeah, now there's sort of thing. Yeah, human conversations. You just need to sometimes. Yeah, the maths might be okay, but just the reality of it all. So it is coming tax time. There are things. I've often talked about super, and you can make extra contributions to super, but that is locking your money away. You'd have to have spare cash definitely to do that sort of thing. But from your point of view, what are say some of the top 3 or 4 tips that you usually say around this time of year?
Number one, if you haven't had a good tax accountant that you're inspired or you've been doing it yourself, find one
Yes,
for
good.
23.
Good.
Just
I like
to
that.
get an idea whether there is something missed, right? So once you got that, you're ticked, yeah. But moving aside from that, definitely place the super contribution at the top of the list. And the reason I say that, I mean, obviously there's the tax benefit there, but if you dig deeper into it, if you think about, let's say someone's got 10 grand in the bank, right? And they don't need that, they're saving it for the long term. Leaving it in the bank, if you think about it, will generate a little bit of interest, right? And then you've got to show that on your tax return. So if we distill that, the ATO is actually charging you money to make a little bit of money. Yep. The flip side of it is you plug that into your super instead. Now the ATO comes out and gives a tax deduction, which is far higher than the bloody interest rate in the bank. So here's the ATO giving you more money, right, than what you had before, to make more money in the long run. And the problem is sometimes clients can't put 2 and 2 together. So if you sat down and put the interest rate what you're getting from the bank on paper, and then you have a bit of a look at a reasonable super fund, what it's making long term, you look at the two and you go, well, it's a no-brainer. This obviously makes better. And so the motto is that we have here is say, the ATO gives you money to make more money this way. The other way, the ATO takes money from you to make less money. Now, which road are you going to take?
Yeah.
Now, once you put it very clear, mate, it's a no-brainer. So to me, it's amazing how many people are still compromising themselves simply because they just can't put the facts on paper. Once you put the facts on paper, it's a no-brainer.
Yeah, I love that.
So definitely end of year, have a look at that. The other thing that's available, as most clients would know when they look at the ATO portal, if their super balance is less than $500,000, they can actually go back and scoop up any unused contribution gap from prior years as well, back to 2019-20, I think it is. So it's an opportunity to actually boost even more and even get a bigger tax deduction, and probably makes a lot of sense as an advisor now, putting my advisor hat on. The fact that the market's been subdued kind of for a while, you're actually buying into a lower market. So that's also helpful in the long run. So it ticks a lot of boxes, and I think clients need to be aware of all those points. So definitely super, you can't possibly go past that as a strategy end of year. Home office is the other one. With COVID, we've all been blessed to work from home a lot more than what we were before COVID.
Yes.
The rate was 52 cents. The general rate, and then you also had the 80 cents, the higher rate. It's all been blended into one rate now of 67 cents, which means at 67 cents per hour, you don't need to justify what the money was spent for in terms of heating, lighting, as long as you got the hours registered of what the work that you've done at home. So I encourage everyone just to get a little bit of a perspective there and say, well, what have I done over the last 12 months? And get those hours in there, because that automatically, the hours times that rate, gives you a notional claim or a claim in your tax.
So just on that, what's the best way you find for people just to record that? Is that just from a book? Your hours on your Excel spreadsheet, or just something you just take notes of?
Well, I think one way they can probably do it is, we leave a lot of footprint nowadays in computers, which is interesting. So even if they open up their I find Outlook, you open up Outlook and say, mate, how many emails have I sent, in the evenings? There's record of emails that you've sent. If you're having meetings from home, Zoom meetings and the like, that's all in the calendar as well. So really, to me, for most professionals, the data's already there. It's just a matter of just stepping in through it a bit and say, well, there's my evidence. So that's permanent there. Should the ATO want to audit, there it is, the facts are there. So just take a bit of time through the calendar and your sent emails.
And do you need to track that for 12 months or like a 3-month period?
No, the ATO says 1 month is sufficient it comes to your home office, 1 month. When it comes to your travel, now, on the other hand, with your car, it's 12 weeks. So 12 weeks travel log for car travel, and 1 month usage per your calendar and email. So it's not a complicated process. And once you've done that, mate, you're right for the rest of the year.
Okay, good. Yeah, okay, thank you for that.
That's a pretty straightforward thing. But the other thing that gets missed quite often is depreciation on various equipment. And people shouldn't forget, I mean, they buy a desk, chair at home, and it's kind of interesting. with clients, when they sit through a meeting in our office here, they forget things, and you sort of start running through the normal things. You go, mate, have you bought a desk at home? Have you bought a chair? Oh, yes, I bought a chair. And what amazes me is that with all the technology around us with phones now, all you have to do is just open up a note in the notepad or note section, notes, and just say accountant 23. Just put little bullet points, for Christ's sake, as you go through the year. At the end of the year, cut and paste it, and there it is, it's done. So we've got all the tools, but somehow doesn't get used, as widely as it should. So the home office, I think, is a big one. The ATR does expect people to continue with these claims because people are still working from home most of the time. Now, the other thing then, we've got business owners and investors. I mean, there's quite a lot of things there for investors when you get into investment properties. Never cease to amaze me how many times in the properties depreciation's not picked up because no one told them any of that in prior years, although that has been limited a little bit now. So basically only the improvements in the capital value. You cannot pick up things like carpet and blinds and all those things because only if they're new. If you put them new, you can depreciate, but if they're put in by previous owners, that sort of got knocked out of the way. That's no longer available. But just the construction costs, you might have bought a property, it's fairly old property, but hey, they've added in an extension, for example.
Sure.
And if that's after 85, all of that could be surveyed, and now you're getting 2.5%. So a simple case where house has been extended and you got $100,000, that's $2.5 a year. Might as well have that for 40 years and not have it, right?
Absolutely. Why not? Yeah, absolutely. Oh, sorry, I can hear your voice getting a little bit of a crackle. So I've kept you, we've gone definitely half an hour, and I just really appreciate it because a lot of stuff you're making just makes sense, and there's a lot of really good tips in there. One thing people do actually ask because, when I first started out in business, everyone used MyOp. Now people say, oh, no, Xero. From an accounting point of view, what do you guys actually when you're working with a client that they've got, is it that they've just got something, you don't mind what it is, or is there actually things you see that you prefer to work with?
Xero seems to have taken the lead. MyOp was a good software, and we still use MyOp as well, but our prime platform now is Xero. All businesses, IT businesses, invest at different stages, and we found that Xero has put quite a bit of capital behind their software. They're fully on the cloud, very versatile, straightforward, runs. MyOb, with respect, sort of fell a little bit behind there. I'm not sure whether they're on the cloud yet. And from our perspective as tax agents, if you have to load on a server and then you do updates and whatever is messy, when it's in the cloud, it's already available. So you essentially can respond to clients 1st of July, for example, everything's done. You're not loading and changing things. So long term, I'm not sure. I mean, Xero is great, but long term, even the ATR might step in because they've invested quite a lot of money in technology to link their system with the banks. So we might even find the ATR might end up with a system of its own that says, hey, we're loading everything up. We're happy. I mean, they've loaded up a lot of data now, which is great from super funds as well, the amount of information in there. So you know what the super funds are, what your contribution caps are, what's available. All of that is on the portal. That is huge. And why do I enjoy my job? That was the other big question. Did you want to hear that?
Oh, absolutely. Yep.
Basically, the thing that never ceased to amaze me, Mark, and I'm not going to dwell on it too much, is that the difference broad wisdom makes, financial wisdom makes to individuals, no matter who they are and what they have. That's the thing that never ceased to amaze me, the difference that it makes, the broad financial wisdom to any individual, no matter who they are and what they have. That's the bit that I surprise myself every day.
Okay, excellent. I love that. No, thank you. Yeah. No, that's an interesting point. Okay, so thank you so much for everything you've been able to provide. And one of the things we always do as a last question is, what's the best piece of advice anyone has ever told you?
For myself, the biggest one that we've taken many years ago, I think someone rattled off and said, it's not what you earn, they said, it's what sticks to your fingers. And I always remember that. And saving the first dollars from the net pay rather than what's left over after you've spent everything, right? Just very simple principles. And the big one for AMCO, how we've developed AMCO, there was a statement that a statement made by, I think it was Abraham Maslow, if I remember correctly, Abraham. And it said, if the only tool we have is a hammer, every problem looks like a nail. And that always resonates for me as far as AMCO, in order to make it as broad and as relevant as possible to handle clients' needs, as opposed to having a very narrow focus. And I never forget that saying, if all you've got is a hammer, then every problem looks like a nail. And that just continues to resonate.
That's just relevant. That's just, I really like that. But the sticky fingers, one of my favorite books is The Richest Man in Babylon. And I think that's exactly the same thing. One of its great quotes is very much, a part of all you earn is yours to keep. And people just don't, people get salaries and they just disappears. And they don't realize, and what sticks is yours. No, I really like that quote. Danny, it's been a pleasure to have you on. As I've known you for a long time, you've really looked after my clients. You look after us, but you just speak in really without the jargon, without unfortunately, a lot of tax advisors just like to speak in stuff that that confuses you, but you cut through all that jargon. And so it's been a real pleasure to have you on the show. So thank you very much for being here.
Yeah, it's my sincere pleasure, Mark. Thank you for the opportunity.
I hope you enjoyed this episode. If you'd like to know more about Danny Mazevski, visit amcotax.com.au. That's amcotax.com.au. Or feel free to email me on admin@themoneysandwich.com or visit our website, themoneysandwich.com, if you have any questions or would like to learn more. Want more practical, easy to understand tips and action lists to help with your money stuff? The latest version of my book, The Money Sandwich, is now available to order on Booktopia and Amazon, as well as available at all popular bookstores. Everyone deserves to retire comfortably and on their own terms. Make this the year you take action. As with every podcast, this information is not advice, as not personalized to your own situation. And past performance is never guaranteed for the future. What we are trying to do here is to provide tips, coaching, and education to help improve your money knowledge, which we believe can only be a good thing. See you next time when we take another bite from the Money Sandwich.